This is Brennan on behalf of The Dynamic Trader, and in this video we're going to be covering the difference between a consolidation and a trend. In the second video of this series, you learned how to identify the bias in the trend, but what is a consolidation? Now, the best way for me to explain it is to picture having a box and you have price touching the top and bottom of this box, and it's stuck within this range. It cannot break below and it cannot break above. So when we have this range or this sideways movement, this is what we are considering a consolidation. Now, for price to essentially break out of this consolidation, we would need price to break, in this case, below the range or the box and continue to the downside. Now, as trend traders, we obviously want to be in the market when the markets are trending, and we want to be standing aside when the markets are going through a period of consolidation. It is very important as a trader to preserve your capital, and many traders will chase the money and are more concerned about making as much money as possible instead of waiting for the right opportunity and preserving their capital until that opportunity arises. Now, two things I want to iterate right here. One, not placing a trade is also a trade. Let that sink in really quick. Not placing a trade is also a trade. And two, standing aside can often be the best position. When the market is not in our favor and is going through a period of consolidation, it is often best to stand aside and let the market make its move first. Even though we as trend traders don't trade a consolidating market, a consolidation can be a great thing for us because it forms a new area of support and resistance that we can trade from. Now, you don't want to buy at the top of an uptrend or sell at the bottom of a downtrend, and that's why having a base or some form of consolidation can really add to a confluence of events when looking to take a trade. And as I've heard my mentor say before, if you're not buying at a base, you're probably buying at the wrong place. So with that being said, we'll go ahead and have a look at this stock right here, which is Centene Corporation, ticker symbol CNC. And what I'll do is analyze the weekly time frame. So taking what we know from the second video in this series, we know that when price is trading above the 200 and the 50 moving average, we have a bullish bias, and as you can see here, we had a move upward in a nice linear fashion in this area, this bullish trend right here. Now, once price reached this pivot high around the end of June of 2015, price retraced, and then as we can see, went into this period of consolidation. Now, everything highlighted in the red right here is where you would not want to be trading this stock. When price is moving up and down and the buyers and sellers are fighting against each other, it is a very smart move to let the market play out and see what happens from there. And as you can see here as well, price is trading in between the 200 and the 50 moving average, which is, we still have a bullish bias on this stock, but the fact that price is within these two moving averages makes it very hard to distinguish which way price will continue from here. Okay, looking beyond this area of consolidation, price finally broke above this recent pivot high, retested, found support, and then what happened? We formed a new trend to the upside, and like I just mentioned not too long ago, if you're not buying at a base, you're probably buying at the wrong place, and this is a perfect example of that. If you see price right here moving to the upside, a lot of people have a fear of missing out on a possible uptrend. A lot of people will buy right in this area right here, right before price is about to retrace and have a breather period or an area of consolidation, or go through an area of consolidation. Now right here, we had the breather period, we had the long area of consolidation, price broke out, retested, and then broke out once more. Right in this area right here would be a very good area to look to take a long trade on this stock because we are buying at a base of support. So just to quickly cover that one more time, we want to be profiting in these areas, here and here. Just 1 second. Here and here. And we want to be standing aside and preserving our capital within this area right here. Next, we'll be looking at a Forex pair, which is the euro against the US dollar. Now, as you can see here, we had a nice bearish trend where price was trading below the 200 moving average and below the 50 moving average. And it was a very linear downtrend, very quick as well. Now, this is an area where trend traders would want to be in the market and profiting off of this move. Now, after every big move, price goes through a breather or a period of consolidation. And as you can see, after this big move to the downside, price retraced and went through this period of consolidation. This is where we do not want to be entering any new positions, and again, standing aside and preserving our capital. Okay, so there's one last thing I want to do here. I went ahead and drew in an imaginary 200 moving average and an imaginary 50 moving average. And I'm going to select the ghost feed option on TradingView. And now what we want to do is we want to trade the trends when price is moving up. And then once price falls into this period of consolidation, we want to be standing aside. And then say price dips below the 50 moving average, price breaks above the previous resistance, retests, finds support, and then continues to the upside. Right here, so we have this uptrend, then we have consolidation period to stand aside. We have a breakout of the consolidation, a retest, price finds support, and then once we have the breakout above this level right here, that is usually a good indication of a new trend forming. Where as we can see here, price continues to the upside, has a small pullback, and then continues to the upside once more. So to summarize everything, we want to trade the trends, stand aside during consolidation. When price does consolidate, wait for a base of support or resistance to form. Then once price does break out of the consolidation, it's a good idea to wait for a retest and then another breakout. Thank you for watching.